Good morning. This is Lance, an equity analyst for ABCAP, and welcome to Daily Trading Notes. For the US markets, the Dow Jones fell 300 points, the S&P fell 25 points, while Nasdaq gained 29 points. The Dow snapped its 6-day winning streak, its longest win streak since its 8-session stretch last September 2019, while the S&P also took a breather after turning positive for the year during the previous session. Meanwhile, the Nasdaq briefly hit the 10,000 mark, driven by FANG stocks. For a market outlook, the PSEi flirted with a new high yesterday, closing at 6,583, breaking the resistance of 6,575. The market may likely retest and close the gap at the next resistance of 6,745. However, the market may be overheating in the short term as the RSI hit 76 yesterday, so this may be a good time to lighten up on select issues. In other news, the country has so far raised as much as $6.5 billion from loans and grants to address the impact of COVID-19. These include loans from ADB, World Bank, and AIIB. The Philippines is one of the countries in a bright spot with having low public external debt. Currently, the debt-to-GDP ratio of the country is at 41.5% from 39.6% in 2019 and will most likely be bumped up further to 49.8% this year and 51.5% by 2021. Despite the increase in debt level, this is still considered a healthy position. An increase closer to 60%, however, may be detrimental to the economy, as a bulk of the budget may be just used to repay debt. So in theory, the country could still borrow more. Along with the Philippines, Thailand, Vietnam, and Malaysia are the countries that may push their debt levels closer to 60% by the end of the year. Economists are now expecting the Philippine economy to contract anywhere between 2 to 4% this year. Also in other economic news, BSP Chief Jokno stated that the BSP will likely keep rates steady, even with the slowing inflation, as they would want to be ready in case of a worse fallout from the coronavirus. So far this year, the BSP has cut the policy rate by a total of 125 basis points to 2.75%, and the reserve requirement by 200 basis points to 12%. The BSP is set to have their policy meeting on June 25. Lastly, the World Bank projects the Philippine economy to shrink 1.9% this year from their 3% growth forecast last April, and they maintain their 2021 growth projection for the country at 6.2%. World Bank assumes that the lockdown measures are gradually relaxed in the second half of 2020. Meanwhile, bad loan surge in April. Banks' NPLs rose 18% to 252.6 billion pesos as of end April due to pass-through as well as restructured loans due to COVID-19. The growth was faster than the 8% rise in loans to 11 trillion pesos. NPLs are referred to pass-through accounts where the principal or interest is unpaid for 30 days or more after due date. As a result, NPLs rose to 2.3% from 2.15% year-on-year. With this, bank provisions for credit losses surged 20% to 235.8 billion pesos, translating into a higher NPL coverage ratio of 93.3% from 92.3%. Most banks in the Philippines has jacked up their provisions this year. BDO to 22.1 billion pesos, SecB to 5.7 billion pesos, Metrobank to 5 billion pesos, BPI to 4.2 billion pesos, PNB to 3.4 billion pesos, RCB to 1.6 billion pesos, and UBB to 1.3 billion pesos. NPLs are expected to rise further to as much as 5% this year. Thus, despite the increase in bad loans, the Philippine banking system remains healthy after several measures implemented after the Asian financial crisis. And that's it for our market outlook. Have a good day.